Hello and welcome. Today we're diving into Dahua Technology, a company that's in the middle of a really significant, though quiet, transformation. We're going to break down exactly what's driving this strategic pivot and what it all means for the company's future.
All right, so let's get straight to the core thesis here. The story around Dahua, what everyone's talking about, it's not about how fast it's growing anymore. The focus has completely shifted to something else, the quality of that growth. This is a fundamental change in how the company is being evaluated.
So here's how we're going to structure our analysis today. We'll start with that core thesis, then dive into the financials that prove it out. After that, we'll unpack the AI strategy behind it all, assess the company's competitive position, and wrap up with a look at the outlook, both the catalysts and the headwinds.
Okay, so let's dig right into that core thesis, this idea of a quality-driven transformation. What's the actual evidence for this claim?
Well, the first piece of evidence, you can see it right in the market's reaction. Between September 1st and 25th, Dahua's stock jumped over 8%, significantly outpacing the CSI 300 index. Now, a divergence like that isn't just random noise. It's the market waking up and reacting to some very real, very tangible improvements in the company's fundamentals.
So what are those fundamentals exactly? Well, for that, we need to turn to the hard numbers. And the first half 2025 financial report gives us the concrete proof we're looking for.
First up, let's talk profitability. Take a look at the gross margin. It hit 41.61% in the first half. Now, a number like that tells you something important. It points directly to a much richer product mix, a clear shift towards higher value products and services.
Next, let's look at cash. Cash flow from operations hit a record for a first half period. We're talking 639 million yuan. That's a really powerful signal that operations are getting more efficient and that they're being much more disciplined with how they manage their projects.
And third, the balance sheet. It is, frankly, the strongest it's ever been. The debt-to-asset ratio has dropped to a historic low of just 24.24%. This gives them a really solid foundation to invest for the future and, of course, to weather any market uncertainty. Now, looking at these data points one by one is interesting, but when you put them into context, you see a really clear trend emerge. As you can see in this table, the first half of 2025 really stands out as a clear inflection point. You'll notice revenue growth looks pretty modest, right? But the key here is the structural improvements in margin and cash flow. Those are unmistakable. It really paints a picture of a deliberate strategic shift in action. Okay, so these financial improvements, they aren't just happening by accident. So what's the engine driving all of this? The answer, it turns out, is a fundamental evolution of the company's entire business model.
At the heart of it all is a strategy they call Dahua Think #2.0. And what this really is a pivot. It's a move away from just being a hardware manufacturer to becoming an integrated solutions provider. The whole goal here is to leverage AIoT, that's the artificial intelligence of things, to unlock the massive value that's just sitting there, hidden inside all that video-centric data.
Now, the technology that makes all of this possible is their Xinghan Industrial Large Model. And it's important to understand, this isn't some general-purpose AI. No, this is a highly specialized tool, and it's built specifically to solve the complex, really specific needs of certain industries like energy, finance, and even urban governments.
And you can see the results of this strategy pretty clearly when you look at where the growth is coming from. It's no longer being driven by the traditional business. Instead, it's all about the enterprise and innovative segments. You can see the enterprise business grew over 8%, while their innovative businesses, well, they shot up by nearly 23%. This is fundamentally changing the company's entire growth profile.
Okay, so a great strategy is one thing. But how does this all translate into a durable competitive advantage? Or, as we like to call it, a moat?
Well, Dahua's competitive moat really rests on three core pillars. First, there's a sustained, high-intensity investment in R&D. We're talking over 13% of revenue now, and it's laser-focused on AI. Second, you have the sheer economies of scale in their supply chain, which gives them critical cost advantages. And third, there's their extensive, deeply localized global network, which is just incredibly difficult for competitors to try and replicate.
Now, when you benchmark Dahua against its key industry peers, you see a pretty distinct valuation profile, especially relative to its gross margin. For instance, its trailing P/E ratio is quite different from its main domestic competitor. What this reflects is the market's complex assessment of its strategy, its growth prospects, and of course, the specific risks it's facing.
Finally, no objective analysis would be complete without weighing the future. We need to look at the growth drivers on one side and the pretty significant challenges the company faces on the other. So let's look at both sides of that ledger.
So on the positive side of the ledger, there are three key catalysts that stand out. First is the ongoing commercialization of their AI model, which is driving sales of that higher margin software and hardware. Second, there's this data-driven flywheel effect taking hold. The more devices they have out there, the more data they collect, which then refines the AI, which in turn drives more sales. It's a powerful, self-reinforcing cycle. And third, that structural shift towards enterprise and innovative businesses is continuing to diversify their revenue in a really healthy way. But of course, it's not all smooth sailing. The company's up against some very substantial headwinds. You've got geopolitical and regulatory pressures, things like trade restrictions and evolving data security rules, and that represents probably the most significant uncertainty here. On top of that, there's a potential slowdown in the domestic economy, incredibly intense competition, and those persistent vulnerabilities in the supply chain.
So what this all boils down to is this central tension. And that brings our analysis to a final, really important question. Can this internal transformation, which is driven by a smarter business model and a powerful AI engine, can it generate enough momentum to overcome the very real, very significant external headwinds from a complex and frankly challenging global landscape? That, right there, remains the key variable to watch going forward.